Welcome to our latest video where we delve into the recent developments concerning NIO Incorporated. NIO journey has been both immersive and innovative, but not without its challenges. The company shares have taken a significant hit, dropping by up to 7% following their 2024 first quarter earnings report. NIO reported just over $1 billion in revenue, marking a 7.2% decrease from the previous year and a staggering 42.1% drop from the previous quarter, falling short of the $1.48 billion forecast. Vehicle deliveries also saw a sharp decline to 30,053 units, down 39.9% from the previous quarter. Additionally, NIO reported a loss of 33 cents per share, slightly worse than the anticipated 31 cents. Despite these bleak figures, could this downturn pave the way for a rebound? Stay tuned as we explore this possibility and introduce a fantastic opportunity to diversify your investments with a reputable and undervalued company. Don't forget to like and share this video. The electric vehicle EV market in China has been caught in a pricing war, significantly impacting NIO recent performance. However, the outlook for the second quarter appears more promising. Despite an 8% decline, there's a glimmer of hope as some strength was observed in the sector recently. Among Chinese EV makers, BYD seems to be the current favorite, while XPeng and Li Auto face their own struggles. Tesla, a major player in the global EV market, has seen its shares drop to just 60% of their 52-week high, thrusting it into bear market territory. This decline isn't linked to any significant negative developments in the EV sector. NIO stock is in even worse shape, plummeting to only 30% of its 52-week high. However, some investors see NIO as a deep value play. Historically, NIO vehicle deliveries peak in the second and third quarters, with a notable boost in the fourth quarter. The first quarter is typically the weakest. Despite a 40% drop in deliveries for the first quarter of 2024, the monthly breakdown tells a different story. In April 2024, NIO delivered 15,620 vehicles, up 134.6% from April 2023. May 2024 saw further increases to 20,544 deliveries, a staggering 233.8% jump from May 2023, indicating rising demand. Looking at past trends, NIO stock price fell from around $14.20 to $7 in the first quarter of 2023, a drop of over 50%. However, it rebounded to $15.80 in the second and third quarters, a net gain of 125.7% from its low. Currently, analysts have set a consensus price target of $8.40 for NIO, suggesting a potential rally of 71.4% from its current position. Short interest in NIO has also fallen by 13.3% in the past month, indicating a shift in sentiment as bearish traders exit, leaving room for bullish investors to step in. Investors are noting a promising trend by focusing on how valuation multiples are shifting. Specifically, NIO price-to-sales and price-to-book ratios are moving differently from the rest of the auto sector. NIO stock is currently at a 1.2x price-to-sales ratio, significantly cheaper than the auto sector average of 11.9x. This discount arises because investors are wary of Chinese equities, which might be an overreaction. Chinese inflation has been rising monthly for the last quarter, indicating a boost in domestic demand for goods, including electric vehicles. Consequently, the market is willing to pay more for NIO book value. With a 2.5x price-to-book ratio, NIO trades at a 10.6% premium over the sector 2.2x average. This willingness to pay more stems from the positive outlook from NIO management for the upcoming quarter. We are closely monitoring shares of NIO after the CEO announced plans to expand into the Middle East. New York-listed shares of NIO are down 1%. Management aims for deliveries of 54,000 to 56,000 units for the second quarter of 2024, marking a 138.1% increase from last year. This ambitious target hints at a possible bottoming for NIO stock despite recent losses. Record deliveries show NIO is striving to stay relevant in the automotive industry. The company received over $2 billion in cash last December, adding to the $739 million invested earlier in 2023 by an Abu Dhabi government-backed fund. This $3 billion should sustain NIO through 2024 and into 2025. Middle Eastern sovereign wealth funds, like Abu Dhabi, invest with long-term strategies beyond the next fiscal year, with Abu Dhabi controlling about 20.1% of NIO. This patient capital is a significant asset for the company over the next 12 to 24 months. In February, NIO licensed its technology to Forceven Limited, a subsidiary of CYVN Holdings LLC, connected to Abu Dhabi major investment in NIO. This agreement allows Forceven to use NIO's smart electric vehicle technology, software, and intellectual property in exchange for technology fees, including a fixed upfront payment and royalties on future sales. NIO Altman Z-score is -0.51, indicating potential bankruptcy risk within the next 24 months. However, NIO's strong ties with Abu Dhabi should offer some protection against this threat. The introduction of Onvo, a lower-priced brand, will help reduce losses per vehicle in the latter half of 2024 and into 2025. NIO remains a buy for investors willing to take on some risk. NIO. Reading analysts' reports as of June 11th, they are bullish on NIO stock. According to Mumu, analysts believe the stock price will increase over time, with a target price of $6.27. In a recent discussion with Benzinga, Anthony Sassine, a seasoned investment strategist at CraneShares, shed light on NIO's promising trajectory and future prospects in the EV market. Sassine highlighted NIO's recent model upgrades and promotional activities surrounding its battery as a service offering as key factors for future sales growth. The completion of annual model upgrades positions NIO favorably for future sales growth, and attractive promotions around battery as a service could drive consumer interest and boost sales in the coming quarters. Sassine expressed enthusiasm for NIO entry into the mass market segment with the launch of its Onvo L60 vehicle, competitively priced below market expectations, and Tesla Model Y. The Onvo L60 has the potential to broaden NIO customer base and capture a larger market share. This strategic move underscores NIO's commitment to innovation and expanding its product portfolio to cater to diverse consumer preferences. Sassine anticipates NIO EV sales to stabilize above 20,000 units by the fourth quarter of 2024, attributing this to anticipated improvements in gross margins, driven by enhanced automation and the transition to a new manufacturing platform. Monitoring NIO guidance on second quarter sales and margins, pre-order data for the Onvo L60, and advancements in semi-solid-state battery technology are critical indicators of NIO operational performance. While NIO has faced significant challenges in the first quarter of 2024, there are signs of potential recovery and growth in the coming quarters. Investors should keep a close eye on NIO performance and market developments to make informed investment decisions. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.